How different is the performance now in those 7 stocks?
So it's interesting because I feel like even though we all think of the market as being just this one direction, 7 companies leading the charge, the stocks themselves are acting very differently. And if you just measure idiosyncratic risk as like kind of non-market specific risk, we've actually seen a surprising increase in stock-specific risk. So what this means in English is that you can actually make more money picking stocks than just buying the index outright. And that's been our call for a while. I mean, I think what's been a little bit unnerving about this year and the last few months is that we haven't necessarily seen a broadening pattern emerge in the market. We're still seeing leadership pretty decisively in this cohort. But look at what happened after earnings for some of these companies. I mean, these stocks are priced for perfection. Everybody owns them. They're pretty expensive, maybe not as expensive as prior tech bubble levels, but they're relatively healthy in terms of valuations. And I think that what happens from here is a broadening to other areas of the market that aren't necessarily as risky as we think.
We say they're priced to perfection, then they rally another 20% in a single day. It's scratching my head. I just wonder what the takeaway from Friday's price action is.
So, you know what I think was interesting is that one of the drivers for that big bump was initiating a dividend. A big growth company initiating a dividend. And I think that's a really important signal because, our call is that we're at a point where the next leg higher in equities is likely to be retirees maybe moving out of cash back into riskier sources of yield. Of course, this was predicated on the idea that the Fed was going to start cutting interest rates, which obviously is, a bigger question today when that happens, kind of how much, how soon. But I do think that the idea of this wall of cash sitting there in money market and short duration bonds that's earning 5%, if that starts to come down, or if you start to see equity yields come up, like we are in certain parts of the market, I think that could be the value proposition for equities again. It's kind of like TINA 2.0.